One of the reasons that you will always get most businesses in Africa dying before they celebrate their second birthday is because of poor working capital management. So when you talk of working capital, basically we are looking at current assets vis-a-vis what here? Current liabilities. If you are doing business and you have what we call a mismatch, you have, for example, a project, and then instead of you financing this project using long-term sources of finance, for example, you issue a bond, you get a long-term loan to finance this particular project, you end up financing it from your company using like your current assets, or you borrow like an overdraft to finance a long-term project. Automatically, ladies and gentlemen, you will be cooked. Your goose will be cooked as a business, because you will reach a state which we call an illiquid status. When you are in this particular illiquid status, it means automatically that whenever these people whom we owe come for their checks, then the CEO, the CFO will start running away. Most of the times we'll be told stories that the CEO is sick, etc. And yet the truthful stuff is that these people messed up with their working capital. So generally, when we talk of working capital, we are looking at current assets minus current liabilities. And a company that is doing very well in terms of working capital should always have a positive working capital. So working capital equals current assets minus current liabilities. Now here I am, and I would want to get started by looking at what we call an operating cycle. And I would want you guys to tell me whether you are able to see my board. Let me know whether you are able, not my board, but my book, the book that I'm sharing here. The book that I'm sharing here, they're saying yes, they can see it vividly, which is so good, you know. Great. So I would want us to discuss something small here to do with what we call a cash operating cycle, because we can't talk about working capital without knowing that cash is the king. Cash is the king. So you must really appreciate how are we turning around. From the time we procure raw materials, we produce, we hold on to finished goods. We transfer these goods here to the hands of our customers. So we have what we call receivables from them. Up to the time these guys are paying us, up to this time we're getting cash from this particular process. So that is very important to us. The elements of an operating cycle. The cash operating cycle is the length of time between the company's outlay on raw materials, wages, and other expenditures, and the inflow of cash from the sale of goods. The faster a firm can push items around the cycle, the lower its investment in working capital will be. So the faster we are able to push through these raw materials, we transfer them to customers and ensure that these customers are able to pay us pretty first, then the lower our investment in terms of working capital will be. So they're giving us, in this case here, a very important process. You can see these gentlemen, the investors here, they have raw materials. They start making these raw materials into something. But of course, before it becomes something, we shall be talking of work in progress. We're progressing slowly. We make these things finished goods. We sell them to customers. We have what we call receivables. And then they give us, in this case here, cash. Once we get this cash, we pay our suppliers, and then of course the cycle continues. The cycle continues like that. Now, the cash operating cycle reflects a firm's investment in working capital as it moves through the production process towards sales. The investment in working capital gradually increases, first being only in raw materials, but of course for conversion purposes we need labor and overheads. but then in labor and overheads as production progresses. This investment must be maintained throughout the production process, the holding period for finished goods, and up to the final collection of cash from trade receivables. The net investment can be reduced by taking trade credit from suppliers. The more credit you get from suppliers, the better you are in terms of managing your your cash flow. Listen, ladies and gentlemen, even you, if you want to become quite rich, although not very advisable, ensure that you are able to collect your receivables very fast from people and organizations that owe you. So anybody who owes you, always be on their neck to get that payment. But of course, also, on the other hand, you need to ensure that you are growing your creditors, the people you owe. You need to even get back to them and tell them to lend you more. Quite a bad status, but that is it. If you look at, for example, most of these big companies like Safaricom, like 𝒂𝒚, most of these guys, when you go to their premises, supplying things there, they can't give you cash promptly. They'll ask for a very long credit period because they know the more the credit period is, the better their cash management cycle will be. So for receivables, tell people you're giving them a 10-day receivable period, 10-day. But on the other side, here you are negotiating with your suppliers to give you like a 30-day or even a 90-day. So in short, quite bad practice, but it is the real thing that the payables must always be increased. Increase the payables amount and increase the payables period. Let them give you a longer period for you to pay them, but the receivables shorten that period. So they're giving us a very important thing here. For a manufacturing business, the cash operating cycle is calculated as follows. So we have raw materials holding period, raw material, these are our current assets. You can see here, we are going to have the days there. Then payables, given that these are liabilities, we subtract. Work in progress, these are our current assets. We add the days there. Finished goods, these are our current assets. We add the days there. Receivables collection, receivables are our assets. We add the days there. So the only days we shall be subtracting are the payables. So ladies and gentlemen, if, for example, you're given this kind of a short example there, you're given this kind of a short example there, and then they want you to calculate what here? The cash operating cycle. How do we calculate this cash operating cycle? You can see they have given us receivable collection period, 56. Raw material inventory holding period, 21. Production period, which is work in progress, 14. Suppliers payment period, 42. Finished goods holding period, 28 days. And then they want me to calculate the length of the operating cycle, something that I want to give you 5 minutes, you try. I want to give you this 5 minutes, you try. Great. 5 minutes, you try. Let's see whether there is any student who will be able to get this correctly, and then I buy them lunch. It's quite a short arithmetic. You don't need to write down even nothing. You don't need to write down even nothing. It's a small arithmetic. It's a small arithmetic. You don't need to write down at all. At all. Just give me the answer. I can see one chart here. Please don't forget the reason why you're around with me here is to give me answers. Is to give me answers. Even if it's wrong, so long as I get answers from you guys, I'll be very happy. Every other thing here will be positive, apart from the payment, apart from the supplier's payment period. That is the only one you subtract. That is the only one you subtract. So ladies and gentlemen, in the interest of time, this is test your understanding 1. So if I go to test your understanding 1, I have the answer here. I have the answer here. I have the answer here for test your understanding 1. You can see here. You can see the operating cycle in days. We are talking over how many days? 77. So could you kindly clap for yourself wherever you are, because most of you really got this correctly. 77 days. You guys are bright. Thank you so much. But again, you must reckon with one fact here, that in your exam, the examiner can never give you those days directly. You must be at a position of knowing how those days are calculated. Receivable days, payable days, work in progress days, inventory days. We must be at a position of calculating them. Otherwise, we shall get what here? A zero. We shall get a zero in this question that will come. So to demonstrate what I'm talking about this afternoon, I would want, ladies and gentlemen, to do this question for you here. This illustration, you can see it here. So they want us to calculate the relevant working capital. No, these are working capital ratios. Working capital ratios, working capital ratios, working capital ratios, working capital ratios. So these working capital ratios for the operating cycle, are we able? Yes, you can use this example very well. So are we able to calculate these ratios very well? I would want us to start with the inventory days. Inventory days. Let me see whether there is anybody who will be able to remind us that formula. How do we get inventory days? Inventory days. Inventory days. How do we get inventory days? Inventory days. Inventory days. So to get inventory days, if you allow me, in the interest of time, yes, I can see today my students are doing very well. They're giving me answers. They're giving me answers there. No, they are not giving me answers. They are not giving me answers. They haven't given me answers. They want lunch, these people. They want lunch. So to get inventory days, you don't have to use those words like inventory holding period. No, inventory days. What you do, you see, inventory is in the cost of sales. Inventory is in the cost. If you look at cost of, how do we get cost of sales? You normally take opening inventory, you add purchases, you subtract closing inventory. So inventory is always well within cost of sales. Therefore, for us to be able to get inventory days, we normally take inventory amount given, you divide this by cost of sales, and then you multiply this with 300 and what year? 365. Because when you're getting inventory days, please never use sales here. Never use sales there. So then, ladies and gentlemen, if you look at this question that we happen to be having here, you can see the inventory here is 4.3. The inventory is 4.3. So we have here 4.3 all over cost of sales. The cost of sales, ladies and gentlemen, here is 25. The cost of sales is 25. 25 times 365 times 365. Please tell me, what figure are we getting? What figure are we getting here? Times 365. What figure are we getting? How many days do we have there? How many inventory days do we have? So according to Lena, 62.78 days. Don't forget to write the word days there. 62.78 days. Are the other students able to get that figure really? Are they able to get that figure really? Are they able to get that figure really? These students, are they able to get that figure? Are they able to get that figure 60, almost 63? You can put decimals or you leave them out. So the other thing that I would want to see you guys giving me pretty first, I would want you guys to go ahead and give me the receivable days. Is there anybody, first of all, who is able to give me the formula of receivable? How do we get 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 receivable? By the way, now I think you've gotten used to me teaching. Should you realize that I'm moving very fast, because I know the talent that I have, it's a very unique talent. I speak very fast. But at times that talent, in this case, I could work against my students. So should you feel that I'm moving very fast, please tell me, hey, why am I moving this fast? It's because of your time. Now you don't have time. You only have 3 days. If it was a normal class, I would have taught for many hours. But fortunately, I can see you guys are following. But should you feel that this speed is so intense for you, you are not able to cope up totally, you tell me, hey, Please go slowly. Go slowly, go slowly. Great. So for receivable days, so basically I'll go to my balance sheet, pick the receivables. Receivables come as a result of who? Sales. They come as a result of selling. When we sell is when we expect to receive. In most cases, you'll just use sales there. But in this particular type of a question, they have told you the sales which are on credit. So you know it's creditors who will be our receivables. Times again what here? 365 like that. Times 365 like that. So then should you want to get this, you can see the receivables here, there are 4. Receivables are 4. Receivables are 4. Credit sales, I can see sales in total is 30. Total is 30, but you see 80% is what is on credit. 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 So then how many days are we talking about? Thank you very much. I can see you guys got this very well. Thank you very much. Thank you very much. So then how many days are we talking about here? Receivable days. Receivable days. They're not talking to me. I don't know why they don't want to talk to me. I don't know why they don't want to talk to me at all. I don't know why they don't want to talk to me at all. In terms of receivable days, in terms of receivable days, in terms of receivable days, what do we have there? In terms of receivable days, is there anybody who has the 60-something, 60.83 or 61 days, isn't it? You can see the answer here. You can see the answer there. Thank you so much. So then I would want you straight away to go ahead and calculate for us the payable days. Go ahead and calculate for us the payable days. Payable days. Is there anybody who can give us the formula there? Payable days. Is there anybody who is able to give us the formula? Is there anybody who is able to give us the formula for payable? For payable, you guys are brilliant. Very brilliant. Very brilliant. Payable days. Payable days. So payable days, what do we have there for payable days? What do we have there for payable days? I don't know why they don't want to give me the formula. I don't know why they don't want to give me the formula. So thank you very much. I can see 3 charts there for payable. For payable, yes, I can see. Yes, thank you very much. Payables. We know payables come as a result of what here? Purchases. When we purchase, we create a payable. When we purchase, we create a payable. We create a payable. So they're telling me, Mwalimu, for payable days, 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 this is normally what we do. For payable days, this is normally what we do for payable days. So payable days, we normally take the payable given in the balance sheet, you divide by purchases, specifically the credit purchases, times 365. So the payable has been given in this question. The payable has been given in this question. The payable has been given in this question. The payable has been given in this question as 2. So we have here 2, and of course we are in the business of purchasing materials, and you can see materials purchased, all of them on credit, 18 times 365. 18 times 365, which will end up giving us how many days? Thank you very much, Lena. 41 days. 41 days. Now, once you do that, then you should be able to give us, thank you very much, Elijah. You should now be able to give us our cash operating cycle. So it should be able to give us what we call COC, cash operating cycle. So the cash operating cycle, I can remember we have 3 items. We have inventory days, we have receivable days, we have receivable days, 3 of them, receivable days. Then we have payable days. This question does not have anything to do with work in progress, finished goods, we don't have. So payable days. So payable days are the only ones that I can remember. And the payable days must be in bracket. Payable days must be in bracket. Inventory days, is there somebody who can remind us what inventory days were? Anybody who is able to remind us what the inventory days were? Hey, you, my bright students. Great. All of you are great. 63 days according to Elijah Mwendwa. 63 days. How about receivable days? 61 days. So then are you able to give me my cash operating cycle? Please remember the assets here are positive. This current liability will be negative. So is there anybody who is able to give me this the COC? So the COC, they are telling me that the COC is 80 what year? The COC, they are telling me that the COC is 83. The COC is 83. They are giving me a value of COC there, which is what year? 83. So of course, as a finance manager, you will be under pressure. Come next period, they cannot allow you to have 83 or more. Come next period, they would want you to have a cash operating cycle of less than what year? 83. The cash operating cycle tells us it takes company X 83 days between paying out for materials in inventories and eventually receiving cash back from who? From customers. So whenever we talk of a cash operating cycle, ladies and gentlemen, what we're supposed to know, this is that length of time your cash will stay outside there. When you procure these materials, you have made payments there. Of course, that particular cash will revolve around those materials. We produce goods, we sell, and then you get now money out of sales. So in this case here, how long will your money stay outside there? The moment you answer that question, you would have answered the question to do with what we call the COC, the cash operating cycle. And of course, you know, for liquidity, money is sweet when you have it. The more the days this money spends with customers outside there and with your raw materials outside there, the higher the risk. Now, with your permission, should I go to the next thing? With your permission? I mean, that's a polite way of asking whether we are together. It's a polite way of asking whether we are together. It's only Nicodemus who is telling me, Mwalimu, yes. The other students, yes, thank you so much. So then, ladies and gentlemen, I should be able to come here and now take you through a rigorous question. Because again, the examiner cannot just give you, he knows you end up getting everything very easily. And of course, you and the examiner are always fighting. You are always fighting. Like if you look at this kind of a question, you must have seen this kind of a question from your past paper. Test your understanding too. Calculation of the COC, the cash operating cycle. Marlboro Company estimates the following figures for the coming year. So we have sales all on credit, we have receivables, we have gross profit margin, and then I can see I have finished goods. This is very good because I'll calculate the finished goods as days. We have work in progress days. We have raw materials, of course, that will help us to calculate like the payables. We have trade payables. So we shall calculate payable days. So inventory levels are constant. Raw materials are 80% of cost of sales and all are on credit. And then they want us to calculate the cash operating cycle. The thing is, these crazy people have given you gross profit margin. Your teacher must have told you, because this is very common in your exam, your teacher must have told you that whenever you see gross profit margin percentage being given there, then you must construct for us like a dummy income statement. an extract of an income statement, where basically you give us the sales, cost of sales, and the gross profit. Because you need cost of sales somewhere. You need sales somewhere, right? So whenever you're given a gross profit percentage, you must always derive some kind of an extract income statement. So then come and write here income statement. So then we have our revenue, our sales revenue. So our sales revenue in this question, our sales revenue in this question is 3.6 million. 3.6 million. Our sales revenue is 3.6 million. I would need to come here and subtract cost of sales, which I do not have. But fortunately, they have given me gross profit margin. They have given me gross profit margin as 25%. So when they give me gross profit margin as 25%, when they give me gross profit margin as 25%, what do you think shall I do to be able to get gross profit? What do you think shall I do to be able to get gross profit? What do you think shall I do to be able to get gross profit? What do you think shall I be able to do to be able to get gross profit? What do you think shall I do to be able to get gross profit? Is there somebody who can help me, because they have given me gross profit percentage? Gross profit percentage. Now I would want to get the gross profit itself. They've given me 25%, but I would want to convert that to money. I would want to convert that to money. So then how will I be able to get money? How will I be able to get money? Thank you very much. So in this case here, the gross profit, it will be the margin times who? Times sales. It will be this 25% times the sales revenue, which is 3.6 million. So is there somebody who is able to give us this figure? Is there somebody who is able to give us this figure? Is there anybody who is able to give us this figure? 25% of 3.6 million gives us how much? Gives us how much? Somebody there help me. Now here I'm feeling I'm being left alone. I'm being left alone. So then this gives me 900,000. 900,000. All right. So then what will be the balancing figure here? What will be the balancing figure here? The balancing figure is what? So there must be a figure that if I subtract here, I'll be able to get 9. So I'll take 3.6 million minus 900,000. Minus 900,000, which will give me 2.7 million. 2.7 million. This is so important to me, this extract of an income statement. And if you remember very well, you see, to get gross profit margin, we normally take gross profit over sales. That's how we normally get gross profit margin. So then to get gross profit alone, just make it the subject of the formula. To get gross profit, you will take the gross profit margin times who? Times the sales. Gross profit margin times the sales. And that is what I did exactly here. And now once I've gotten the cost of sales, there is something else that they have told me that is very important that will help me to break down my cost of sales. They have told us here that raw materials are 80% of cost of sales. So basically, I'll be able to put here as a note, raw materials purchased. Raw materials purchased. Raw materials purchased are 80% of the cost of sales of the 2.7 million. Of the 2.7 million. Raw materials purchased are 80% of the 2.7 million. 80% of the 2.7 million. 80% of the 2.7 million. So 80% of the 2.7 million, which will end up giving me what figure? Which will end up giving me what figure? Which will end up giving me what figure? According to Lenar, it is 2160,000. And all these are on credit. Now, so I would want us to start now these together. And now this is the juncture at which I'll be able to buy each one of you lunch. I'm very serious about this. 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 So then I would want you guys to come here and now help Mwalimu to calculate these components of coke. You calculate the components of coke yourselves. The cost of the cash operating cycle, the cash operating cycle components, like now you can see receivable days. Could you kindly strive to calculate this? Kindly strive to calculate this. Great.